this is a manufacturing question. Just gonna skip through the first information there. And one thing I want you to always make sure of, understand what is your opening balance from this 1 March 2020 and what is your closing balance 28 February 2021, right? Then first additional information, total sales for the year amounted to 2,752,000. And second one is the business applies a profit markup of 60% on cost. So these two information will be regarding cost of sales, right? So we will revisit that. We're not forgetting about it, but we'll revisit that. So here we have the following transactions relate to raw materials for the year. So before we start going into that, let us have our account for raw materials. So we have raw materials here, right? Raw materials, direct materials, it's the same thing, right? Then we have our balance here, right? Always remember it's an asset account, so the first thing we have is the opening balance of 58,250, right? 58,250. Then we have our raw materials purchased on credit for 540,670. Credit means creditors control. Creditors control for 540,670, right? Then we have carriage on purchases on raw materials. We also add that as we want to know how much did it cost us to get the materials to where they are now to the company, right? So carriage on purchases, which is 45,300, right? Then we have raw materials returned to suppliers. So since we bought the raw materials, we're assuming that it's the ones that we bought on credit. We're gonna have it returns CAJ, creditors allowances journal, for 54,800 rand, right? And then we have our work in progress account, but we don't have an amount for that, so we'll come back to that. And we have our closing balance here, right? And our closing balance would be 27,420. So 27,420. Now, normal accounting T accounts, looking for the bigger side. The debit side has that 500,000, so definitely that would be bigger. Add that side up and you have 644,220, right? Carry that to the other side, 644,220, right? And then we want the balancing figure, so we would subtract the 27,420 and the 54,800, and that will give us, let me just highlight this, 562,000. Just like that, you are done with that part, right? So this information is complete. We're done. We can move on. An additional 45,300 worth of consumable stores were purchased during the year. 75% of the consumable stores are used in the factory and 25% in the sales department. So this we're going to write on the side. So this is obviously factory overheads. I'm just going to write it here, factory overheads, FOH, factory overheads, right? So I'm going to write it there as consumable stores. Consumable stores, right? And then what do we have? So consumable stores, let's not forget, here we have raw materials, work in progress, finished goods, and consumable stores. We have an opening balance for that, so we have 5,500 opening balance, plus we bought some for 45,300, 45,300, right? And we have a closing balance. Remember, closing balance is what we did not use in this financial year, which is 7,800 minus 7,800, meaning what we used in this current financial year was worth 43,000 on the dot, 43,000. But of this 43,000 that we used, 75% was used in the factory and 25% was used in the sales department. We only want the amount that is used in the factory. So this 43,000, we're going to multiply it by 75% to get our factory used consumable stores, which gives us 32,250, right? And that is the final answer. So here I'm going to open a new account for factory overheads, that. Now remember, factory overheads is an expense account, so it does not have an opening balance. It gets closed off at the end of the period. And the first one there, we're going to have indirect materials. Indirect materials for 32,250. Right? Next transaction. The total rent expense for the year amounted to 84,700, and rental for February is not yet paid. The cost must be split according to the floor space occupied by each department. The factory occupies 2,600 square meters of the total business premises, of 3,640 square meters. So let's deal with this piece by piece. Let's break it up. So first, we concentrate on the first sentence. Total rent expense for the year amounted to 84,700, and rental for February is not yet paid. So that tells us that this, I'm just going to say rent, it tells us that this 84,700 is not for 12 months. Remember, we must always account for 12 months, just like what we would do in the income statement. So this is for 11 months, right? Just to make sure that we're on the right track, rental for February is not yet paid. Does February fall in our current financial year? Yes, it does. It is our final month of the financial year. So we're going to say 84,700 equals to 11 months. X means months, right? You can use Y, you can use G. Doesn't matter whichever letter you used. This is not maths, but it will help you. So you're going to divide both sides by 11 to give you rent for 1 month of 7,700. Then you're going to multiply this by 12 because you're looking for a full financial year, and it will give you a rent for 1 month. Rent for the financial year of 92,400, right? But we're not done. We only took care of the first part. The second part says the cost must be split according to the floor space occupied by each department. The factory currently occupies 2,600 square meters of the total business premises of 3,640. So we're going to say we are looking for the cost of 2,600 square meters out of 3,640, and that gives us 66,000, right? And that is the rent for factory for this financial year. Rent is 66,000, right? Doesn't matter if we haven't paid it yet. Remember, if we didn't pay it, it would then go to accrued expenses in our balance sheet, but that falls under, well, it doesn't fall in another topic, but I think it would make more sense there, right? Then we're given the cost regarding the business's gross salary and wage bill for the financial year. Now I want to start with direct labor, right? The costs for direct labor, right? Let's start with direct labor. What are the total costs that go into direct labor, right? Then we have here factory foreman. No, the factory foreman does not touch the materials, does not touch the, what are we creating here? Steel, wrought iron, and wood furniture. So they don't touch it. Factory cleaners, they do not touch it either. But the workers in production, they do. Sales manager does not. So also looking at the next part, the employees' contributions for the year were: factory foreman is not direct, factory cleaners is not direct, sales managers is not direct, workers in production is direct. So we have here the 643,000 plus the 70,730,000 for contributions. We add the contributions to the labor costs, and that gives us a total of, for direct labor, a total of 713,730. So we will come back to this amount because we don't have a T account for direct labor. Some questions have that for you that you can use, but in this specific question it does not. Let me actually write this in a more brighter color. So that is 713, right? We'll come back to that. Then the next part, remember, there is direct labor, there is indirect labor. Direct labor is carried directly to factory overheads. Not factory overheads, work in progress. Indirect labor is taken to factory overheads, then the total of factory overheads is taken to work in progress. So now we're looking for indirect labor. Indirect labor will does include the factory foreman, does include the factory cleaners, does not include workers in production or the sales manager. And the same will be done for our contributions, right? So indirect labor here, indirect labor, please don't judge me, I am tutoring accounting for a reason and not English. So we have the 148,800 for the factory foreman, and for the cleaners we have 62,200. Those are their normal salaries. As for the contributions, we have 16,000 for the factory foreman, 368, and 6,842 for the cleaners. 6,842 for the cleaners, right? Perfect. And that gives us a total for 234,210, right? And this is carried over to factory overheads, right? Indirect labor is what was it? 234,210. 234,210, right? And we're done with that section. So this whole page we're done, besides the cost of sales section, right? Then we come to the other expenses. So here we have information. The business does not offer overtime hours, so I guess that helps us. But if they did offer overtime hours, we would allocate the hours for direct labor and the hours for indirect labor, and then just add them to those costs. For other expenses, we have the water and electricity bill for the year amounted to 83,280. 65% of the water and electricity account is allocated to the factory, and 15% to administration, and 20% to the sales department. All that is great, but all we really care about is this 65% for the factory. So water and electricity, I'm just going to abbreviate it W&E. Water and electricity, we have 83,280. Let me just erase that so it's visible. 83,280 multiplied by 65%. Only one factory cost, 65%, and that gives us 54,132, right? So we'll come here, factory overhead, and say water and electricity, which is 54,132. Right. Next bullet point, insurance amounted to 21,700, which includes an annual premium of 12,600 paid on 1 September 2020 to 31 August 2021. Right. 10% of the insurance is for the office. The balance is divided equally between the factory and the sales department. A lot was said, but first we concentrate on that first sentence, right? Insurance premium is 21,700, which includes an annual premium of 12,600 paid on 1 September 2020 to 31 August 2021. Now, our financial year ends 28 February. Always remember this. It ends, this is NB, sorry. It ends 28 February. So any costs that are done after the financial year end, we do not account for in this financial year, right? It's like me asking you, how much are you going to spend on food until the end of August, and now you start counting costs for September, right? It's not really the question that I'm asking you. Let's stick to August and tell me what is for August. Even though you've paid for September's costs, tell me what you spent for August. So same thing is happening here. Tell me what you have spent for insurance in this financial year. So this 12,600 is for 12 months. You can see there's 1 September 2020 to 31 August 2021. But we're only looking for the financial year end of 28 February 2021. So from 1 September 2020 to 28 February 2021, that is 6 months. So we're going to account for this for 6 months. Let me say here, insurance, and we're going to say here 21,700 multiplied by, it is 12 months the total. This accounts for 12 months, but we are only looking for 6 months, right? Alternatively, you could have said 21,700 divided by 12, get your answer there, then multiply it by 6. Same thing, different methods, right? As long as you get to the right answer, right? And that will give us, 6,300. Now this 6,300 is only for the 12,000, but remember our total cost for insurance was 21,700. So what we're going to do here is say 6,300 plus what is left of the 21,000. Remember 12,600 is part of the 21,700. So which part was not part of, which amount for insurance was not part of the annual premium that we paid on 1 September? And that part would be the 21,700, right? 21,700 minus 12,600. That is the part that was not included as the annual premium. So this amount here of what is it, 9,100. This 9,100 will be from the beginning of the year, 1 March 2020. So this 9,100 is 1 March 2020 up until the month before September. So that is August, right? Yeah, 31 August 2020. That is the 9,100, and this gives us a total of 15,400. Now you've dealt with the amount of rent that insurance that we have paid for that falls in this financial year, in this 12 months. We are done with that first sentence. Then we continue to the next part. 10% of the insurance is for the office. Let me erase that. Is for the office, and the balance is divided equally between the factory and the sales department. So this is just simple maths. Any percentage is out of 100 minus 10%, that gives us 90%, right? And this is between factory and sales department, so between two departments we'll say divide by 2, and that will give us 45%. So we're going to say 15,400 times 45%, right? You can say 45%, or alternatively you could say 45 over 100. Same thing, as long as you get to the right answer, right? What we get there is 6,930. That is your answer. So that is the insurance that goes towards factory for this financial year. And we come back here and say insurance of 6,930. Right? On to the next line. Sundry expenses for the year were 17,776. The cost is divided to factory, administration, and sales departments in the ratio of 2 to 1 to 1 respectively. So if you're not familiar with this part whereby they say respectfully, it means that this 2 will be for the first thing they listed, factory. This 1 will be for the next thing they listed, admin. And the last one will be for the last thing they listed, which is sales, right? So 2 to factory, 1 for admin, 1 for sales. What we do there, simple, we will say 17,776 multiplied by, we're looking for 2 parts, which is factory, out of how many parts are there in total? 2 for factory plus 1 for admin plus 1 for sales. So there's 4 parts in total. So we're going to say 17,776 multiplied by 2 out of 4, and that gives us 8,888, right? And we will take this here to sundry expense of 8,888, right? Now what else is left? We have depreciation on factory equipment is 51,840. Does that fall under factory overheads, factory expenses? Yes, it does. It is depreciation, so we take the full amount, depreciation, of 51,840, right? Next information, advertising amounted to 7,350. Is that an expense for the factory? No, it is not, so we leave that out. Now we have all our transactions for factory overheads, so we add them all together, which gives us 454,250, right? And remember, our debit side must be equal to our credit side, which is 454,250, right? Then this amount gets expensed, or is taken over to work in progress. Just gonna highlight it once again, and it is the full amount of 454,250. So you'll see here that we're taking out the full amount, and this account, its balance will now be, you are never required to write this part, right? 0. I'm just writing the part in red for demonstrative purposes. Hence, factory overheads does not have an opening balance, does not have it at all, right? So that's what happens with factory overheads. Then now for our next part, I'm just going to write it all down here. We have work in progress, right? Work in progress. Remember, this is also an asset, so it does have an opening balance. So balance, right? We assume it has a balance unless we are told it does not have a balance, right? So the balance, opening balance for work in progress is 24,270. 24,270, and we also have the transactions that we had. So we had, let's start at the top, raw materials or direct materials of 562,000, right? I'm gonna write raw materials. You can write direct materials, you can write direct materials issued, raw materials, right? And that is for 562,000. Then remember, don't forget about it, we have our direct labor, right? Never forget about that. 713,730. So direct labor, seven one three seven three zero. And finally we have our factory overheads, right? Factory overheads, where is it now? 454,250. 454,250, right? And then here you have to just add them all together to get your amount of 1,754,250. Now, I didn't include a specific page on the answer booklet that included the following information. So here they tell you that the amount of finished goods that are issued to that account is 1,740,000. So this is information we are given. At no point did we have to calculate this, right? And we also know that the other part that is on the credit side is the balance that is left over. So same as what we've been doing to the other accounts, we carry this over since it will always be the same. Well, firstly, you just have to check which side is bigger. Don't just assume, actually calculate and find out which side is bigger. And then here we will have our balance of, if you take 1,754,250 and subtract 1,740,000, you will then get 14,250, right? Then for the last account, so this balance we calculated it because here we are not given the closing balance. Same as finished goods, we are not given the closing balance, right? So that is calculated. And then for the final account, we have finished goods. Finished goods, that is also an asset. So it, so that also has an opening balance, right? My accounts are not straight, but it's fine. It has an opening balance of 38,000 rand, right? 38,000. Then we bring the carried part here from work in progress, all the stock that was finished, for 1,740,000. So we will say here work in progress 1,740,000. Let me just double check to make sure my answer is correct. Perfect, right? So we have that on that side. On the other side, this is purely on just knowing your formats, right, on your tier accounts. This never changes, right? So the way you see work in progress, you'll always have on the debit side balance, raw materials, direct labor, factory overheads. On the credit side, always will be finished goods and balance. So the same thing here, finished goods on the debit side, which is your left side, you'll always have balance and work in progress. On your credit side, always you will have your cost of sales and closing balance, right? Now, we need at least one of these to understand which side is bigger. Do we have a closing balance? No, we do not. Do we have a cost of sales? We do not directly have the amount, but we're given the information to get the amount. So coming back to this note that we made for ourselves here, total sales for the year amounted to 2,752,000. That is sales. The business applies a profit markup of 60% on cost. So what we're going to do here is say cost of sales. I'm just going to abbreviate it. Cost of sales, right? We have a selling price of 2,752,000 multiplied by, we're looking for 100%, but we're given a markup of 60%. So markup tells us that selling price is 100 plus 60, which gives us 160. So we're looking for a cost which is 100%, and we're given a markup of 160%. Well, a selling price of 160%. We're given 1,720,000, right? Then we come back to finished goods. We have an amount here of 1,720,000 rand, right? Look for the bigger side. Clearly the debit side is the bigger side, and we add those two, which gives us 1,778,000 rand, right? Take that to the other side, 1,778,000 rand, right? And our final balancing figure there is 58,000 rand, right? And there you go. That is our manufacturing question. So main thing that you should that I want you to note, hopefully you're able to go through this, mark yourself, note what you did wrong, note what you did right, but the main thing that you should always know when it comes to this question specifically, manufacturing, and all other questions that have to do with accounting, understand your formats, understand what your accounts look like, right, and how they work. So you wouldn't be able to calculate this part for consumable stores if you don't know that you have to add your opening balance plus any purchases, subtract your closing balance in order to get your consumable stores that were issued, right? You have to understand how your accounts work. You also have to understand principles and things that are done in the income statement in order for you to answer this question on insurance, whereby you have a prepaid expense but it does not fall in this financial year. You have to understand that to answer this question. And once you understand that, you also have to know that raw materials, any purchases, well, that is carried on purchases, any purchases are added on the debit side. Any returns are added on the credit side. Work in progress comes out of the credit side, and your ending balance is there. So you would not be able to find your balancing figure if you don't know this, right? Same thing with factory overheads. This is roughly straightforward. Sometimes they just give you factory overheads in table format, right? But we don't study and hope. We study enough that whatever question they give you in the exam, you're prepared for. So if they give you a table, you just take everything that's here, everything like that, and that's your table. You get your full marks. If they give you a tier account for factory overheads, you know this, right? So we don't study and hope. We study everything, and we're prepared for whatever comes our way. Work in progress. You also have to understand the account. Balancing figures. We should know these by now. But if you're not so confident with them, practice, right? And then finished goods. You should know that our cost of sales comes out of finished goods. So this was a very good question to go through for manufacturing. If you're able to do this question, this is a very challenging question. So and it comes from one of the past papers for grade 11. So if you're able to do this for manufacturing, even if you're in matric, if you can do this successfully, you should be ready for the question.